Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night. Market-wise, let's take a look at it out here. We have the Dow Industrials up 90, Nasdaq's up 6.5, S&Ps are up 8. Gold contract getting slammed down $17.90, trading at $1,277 an ounce. Silver off 57 cents at $19.44 an ounce. Platinum off 5 at $1,421 an ounce. Light sweet crude flat at 96.07. Bonds just refuse to go down, folks. They rejected lower price today. They're higher right now. 10-year bond up 4 ticks at 126.01. 30-year up 15 ticks at 140.05. King dollar down 75 ticks at 82.20. That's after a roaring higher with wide price spread, accelerated volume. Euro is up 23 at 132.82, and the yen is flat at 103.80. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're over the highs, folks. The cash S&P high that we're going over right now, we're at 1993.71. It's the 1991 level, and needless to say, we will not do the volume. In fact, today may be the lightest volume of the year. Yesterday, you had 535, I think. Yeah, 542 yesterday, and this thing won't come in at this thing. It looks to me, if they can get 500, that's going to be pretty impressive, because that would mean we're going to do 150 million coming into the close. I suspect what you're going to probably get, yeah, you'll probably do 500. We'll find out. That's your. If we go over to, let's go to the SPY first. We go to the SPY next. You look at the SPY. The SPY's 46 million shares out here today. Yesterday, what was weak, you still did 72 million. That's going to be lighter. The SPY would have to close under the 199.16, and I don't think that's going to happen. Why? Because you had the DAX close at its highs today, going into the close. The FTSE closed at its highs. Not that they were up a huge amount. Compared to our indices, they were up much more, though. Right now, you have the Dow Industrials up 0.5%, S&P's up 0.3, the Nasdaq is up 0.1. Over in Europe, you had the FTSE up 0.3, and we had the DAX up 0.9. If we do go over to the Nasdaq first, the composite, flat day in the composite out here, is refusing to give up price, though. You're at 45.32. Volume also will be anemic up at these levels. The NDX 100, the 3Qs, what we have with the 3Qs, we're at 13 million shares right now. It needs to say it needs a lot more shares, but bottom line, that is holding price. Gold. Let's go over to gold. Okay, so what do we have with gold? This is going to get really intriguing. This is what you have. So, wide price spread, price destruction. We're at 1277.80. We hit 1273. We've only done, however, 128,000 contracts. You're coming into 225,000 contracts. And thus far, meaning right here, right now, we are holding the day of strength from the 19th of June. That price that we're talking about is 1277. That's the number. That's the first part. Now, watch how this goes, because this gets really intriguing when you actually look at the equities. When we go to the XAU, what you're going to see is that the XAU is down 256. It's not even close to its swing low, though. The swing low in the XAU, well, we're at 99.27. The swing low in the XAU is 97.05. We go to the Gold Bugs Index, the HUI, we're down $6. We're at 237, but yet your swing low is out there at 231. So the equities themselves are holding up pretty good in context of the metal. Now, we'll shift over to the King Dollar. We know that King Dollar wants higher price, number one. Well, I'm speculating it wants higher price. It roared higher the last 2 days, and gold still held. Today, the dollar index gets to a higher high, 82.42. It's at 82.20 right now. We have done 17,000 contracts. the dollar, folks, had already broken topside 2 days ago with wide price per accelerated involvement, and the dollar wants 85. It's an ABC it's an ABC structure up that has about another point to go, but I suspect your next swing point up there is the 85 level. So I expect that we are going to see that run to 85. Now, this is really bizarre. Now, I've been bullish on bonds, and I'm still bullish on bonds, but let me tell you something. When the Fed comes out and says that the jobs picture is getting better, and in fact, if it keeps getting better, they may go up in rates sooner than expected. When I read that inside the Fed minutes, the sooner than expected, by the way, I suspect still means a long time. The market is saying it means a real long time, because the market absolutely is saying either the Fed is not going to go up, and or the amount of money that's going into bonds to be safe, because they think the S&P is going south. The bottom line, the money is flowing in, continue to flow into bonds. 10-year today got down to 125.25, rejected that low with 1 million contracts. So we're going into 1.8 million, I believe. $1.6. Yeah, no, 1.8. 1.8 million. 1.8, at the bottom of 1.8 million, watch this. This is amazing. The bottom of 1.8 million is 125.27. We got down to 125.25. Rejected it. We're trading at 126. It's a monster ABC up. The 10-year wants to go to 128. The 30-year, same setup, rejected it. The 30-year has done 264,000 contracts today. And the 30-year has been just strong. Talk about strong. The 30-year, let's see, they didn't even get the 30-year back to the low of yesterday. The low of yesterday was 139.11. We got to 139.12. 30 is going topside also. So what does that set up? Well, let's go to oil next, the CLU4. So oil, what we did with oil, okay, oil as of 20th, one second, no, I got to get a new contract. Oil. Gasoline is up 1.4. There she is right there. Okay. Crude oil, right now, we are up 63 cents. You did 200,000 contracts. We're at 94.08. It hit 92.50. Oh, there's some nice volatility in this. Now, oil's at 94.07. If oil can't close today over 94.37, all that's saying is that you're building cause for lower price. And where I'm going with that number, by the way, folks, that is on the 19th, which is 2 days ago. That was just the high of it. You got higher. You're under it right now. It's like you can't even handle that number. It's going to be pretty intense watching this whole thing shake out. Coming into the, let's go over to the XLF. So the XLF out here, the financials, they've been straight up today. The last 3 times up here, they couldn't handle this 2307. You're up over that today. Do they need more juice? It looks like they're, at this particular point, there's just no sellers in the XLF. XLE, however, what you have in the XLE is that the XLE continues that it can't just get any traction. You know, so right now you're at 97.94. We've done 3.6 million shares. That 3.6 million is going into 17 million. So that structure is pretty incredible. Some of the high volume stocks in this low volume market we have out here. You got Hewlett Packard up by $2. We got eBay up $2.44. We'll bring it back to eBay. Citigroup is up $1.26. You have Advanced Micro down 4. Apple's up by 26. And let's go over to Apple, because the number on Apple tomorrow at the close is the 100.72. And right now we're trading at 100.83. And we're talking about, of course, on Apple, we're talking about the high that it is testing this week. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. The Dow right now is up 95. Nasdaq's up 7.5. S&Ps are up 8.5. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year, and if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom, take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 87, Nasdaq up 5.5, S&P's are up 8. And as you're over at TFNN, folks, what you're going to see right on the front page is you're going to see the Tiger Dollar sale. That's sale we do a couple times a year. It is over this coming Sunday. The way this works is that we match 40% of whatever you buy in Tiger Dollars. Tiger Dollars themselves, you can buy from $500 to $2,000. The way it would work, if you bought 500, you get 700 in Tiger Dollars. You bought 1,000, you get 1,400. You buy 2,000, you get 2,800. What you can do, you don't have to get even amounts. You can buy 750, whatever that is, and you get 40% over that. We haven't done 40% in a long time. So it's you want to make 40% of your money. It's a very quick way to do that. If you have subscriptions at TFNN right now for any of the newsletters out there, it's a great way to save money. If you're thinking of getting subscriptions in the future, it's a great way. There's no expiration date. They're totally transferable. And you can check it out right on the front page of TFNN. Now, folks, let's go over to our man, Mr. Andy Hecht. Don't forget, each and every Tuesday and Thursday, 5 to 6 p.m. Eastern Standard Time, right after me tonight. Andy has an outstanding show at TFNN. Also has a great newsletter, the Technomento Commodity Newsletter. The way you get that, you go to our website at TFNN, you go to newsletters, trading newsletters, you see the Technomento Commodity Report right there. You can test drive it, 2 weeks, absolutely free. Andy Hecht, what's going on?
How you doing, Tom?
I'm doing great, man. You having a good day?
I'm doing great. Lots of interesting stuff, little stuff going on today. I heard you talking about oil.
Yeah.
Big divergence between oil prices and the XLE. Oil prices come down 9.5%.
Yeah.
XLE's gone down about 2.5%.
Yeah.
So, I'm keeping my eye on that. In oil itself, looks like it's setting up today for a key reversal. We made a lower low this morning. We're going to close above yesterday's highs, but it's nothing. We got to watch it for a couple of days, see if it's exciting, if it means anything. The volume is moderate today, but certainly have to pay attention to any key reversal on the daily chart in oil.
Yeah, well, what's intriguing, I have that chart up right now, and coming into the pit close, man, they had some big sells, man. I mean,
yeah.
They pushed it higher, like with 2,300 contracts per 10 minutes, and then into the close, man, someone just dumped, oh my God, yeah, they dumped 11,000 contracts twice.
Yeah.
Right.
So we'll see what happens the next couple of days. Now, gold. I heard you talking about that too.
Yeah.
Gold. Interesting. I came on the show when I was on your show on Tuesday and on my own show. I talked a lot about divergence.
Right.
Divergence.
Right.
I'm seeing divergence. Silver and platinum have been very, very cheap relative to gold. What we've seen today is gold kind of caught up a little bit. You got silver only down 6 cents today. Platinum's down $8. You got gold down $18.
Yeah.
So that divergence, that's why these intercommodity spreads are so important to watch, because they show you what's leading and what's following. And, today we had a bit of a catch-up here.
Well, and it's cool, man. What I'm digging here, what had happened, folks, is that silver couldn't hold the June 19th day of strength. The low of that is $19.87. Yet, what you had with silver today is a rejected lower price. So that is good, period, inside the metal market.
Right, and it seems to have flipped here. Maybe we'll see silver and platinum strengthen a bit, because on a long-term historical basis, these two metals are entirely too cheap relative to gold.
Interesting, yeah.
So the market that we had a key reversal in yesterday, sugar, followed through a little bit to the upside today.
Okay.
Put a sugar chart up here. I mean, look, at the end of the day, I'm looking at the active month October sugar.
Yeah.
It's trading at 16 cents.
Right.
The thing has gone one way, down.
It has.
We're having a little bit of a bounce today. But the interesting thing here, Tom, is that the March sugar contract went out trading at 17.8 cents, which is like an 11.5% premium to the nearby.
That's a lot. Huh?
That's a lot. So what that's telling me is that at these low prices, the millers and the growers in places like Brazil, India, Thailand, maybe they'll plant other crops. Maybe they won't mill as much. Maybe they won't plant as much. And maybe we'll see higher sugar prices. Because at these low prices, it becomes a lot less economic than it has been.
Yeah. It's going to get interesting here, too, is that of course, the cattle market,
Oh, yeah. I was gonna go into cattle.
Good.
Cattle's really interesting. But, hogs have dropped so much more than cattle.
Let's go to hogs first. Well, and hogs are the first ones that went higher, too.
Right.
Because of that disease, right? That PS...
But, yeah, that's true. The PED, that was a kind of exogenous effect that forced it higher. Like I said on the show, right now cattle is trading right around 145, 146. the next move is going to tell us where it's going. There's some things working for cattle, the low herds, global demand, but working against it is seasonality. You also have the fact that they are raising more herds now. They want more cattle. The animal protein producers and feed prices have come down dramatically.
Did you see that rancher today on CNBC?
I didn't.
It was pretty. They had a rancher on this morning, and I was thinking of you because I says, "Oh man, this is interesting." And I was trying to figure out even to this point. So they had a rancher on, and from the American Cattle Association, and he was explaining that yes, the herds have never been so small, but also yes, what you just said is that the feed is so inexpensive right now. He says everyone is gearing up in a huge way because they
exactly.
can.
Exactly.
Yeah.
Exactly. So we'll see what happens. I mean, that's longer-term cattle prices should come down. We're very, very high. That's also working against them. But short-term's always difficult. Right now, technically, we're at an inflection point. Let's see which way it goes here.
Hey, let me ask you. I forget. When is the reason that cattle prices went so high is because the grains went so high a couple of years ago and they just killed off,
That's exactly right, Tom. A couple of years ago we had that drought.
Right,
corn prices, soybean prices roofed, and they killed the herds early rather than feeding them. And
so
now we're suffering from killing those herds off in 2012.
Right, no, I'm with you. But that's a normal occurrence, basically, right? Because they can go broke feeding them, right?
Exactly. They go broke feeding them at those prices at that time.
Yeah, right.
So we'll see what happens. I mean, there's a lag between the feed prices and the cattle prices, and we're seeing that now. It should come down.
Yeah.
I'm thinking maybe short cattle, long hogs here on spread to take some of the because demand for animal protein is going up with population and dietary changes, particularly in places like China.
Yeah, there's no doubt. It was intriguing.
The other thing I wanted to show you real quickly was natural gas. Very interesting today.
Yeah.
Very interesting, because the EIA came in with numbers today, 88 BCF build.
Okay.
We were expecting 84. So we initially spiked down, but then we went higher. So I think that maybe there's some warm weather forecast for the next couple of weeks, but that's kind of positive when you have a fundamental piece of news that the analysts were expecting to be actually bearish, and the price winds up almost 6 cents.
Yeah, I can picture, just from what blew my mind yesterday inside the Tigers Den, they were saying in Boston that, they get some chilly days and it's going to be like 70 degrees, for the next week. It's like, man, 70 degrees, it's still August.
It's still August. You never
pretty
know.
Intense.
We'll see.
Hey, listen, man, you have a great night, safe night. We look forward to the show at 5 o'clock.
Thanks, Tom.
Thanks, Andy. Have a great one. Have a safe one. You stay right there, folks. We're going to be coming right back. And don't forget, Andy has an outstanding show, 5 to 6 tonight, right here at TFNN. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 77, Nasdaq's up 5, S&Ps are up 6.5. And it's going to get interesting here because, you know, what you have with the futures, folks, if we take a look at it's going to be hard for the futures to do this, but what you just did have is a slight sell out here. This 1900 future is an important one, and it's not important in the aspect that it's an even number of 1900. What it is that the 1900 is the last time that, as we went up this morning at 10 o'clock, that is where you had some juice. So if you get back inside the 1900, 1990, if you get back inside that, you can get down to the 1985 pretty quickly. So, you know, we'll see how this shakes out. If we take a look at this, what you're going to see, I'll put this on a 2-day and a 10-minute, of course, and what you're going to see right now, we have, you get 6 minutes, and there'd have to be one more sell, but someone just sold into this. Let's go to Rich in Orlando. Hey, Rich, what's going on?
Hey, how you doing, Tom?
I'm doing great. You having a good day out there?
Well, it's pretty hot here in Orlando, but yeah, we're doing good.
Is it, man? See, it's beautiful here. And what's happening, folks, is Mitch from Boston, he's just telling me, we were just talking about the weather in Boston, and it's 75 now, but it's going to be 48 tonight. And that if it's 48 tonight in Boston, that means that weather, what I've found is that weather is going to be down in Florida. That means we'll get 5 degrees cooler, which in Florida 5 degrees is a huge amount at this particular point. You know what I mean?
Yeah, well, we're well into the 90s in this area here.
Yeah, no, I'm with you. So you want to look at the GLD, right?
Well, the GLD, it looks like it closed that gap that it created in late June. Is that correct?
It would be correct, but I wouldn't bite on it right now. The GLD, folks, is that is the ETF for the gold shares, okay? It trades at 10% of the price of gold. And the main reason is that going into a Friday, Rich, okay, they love hitting gold on a Friday. You know, you certainly have lighter volume. There's no doubt about that. I would let this get tested, though, you know.
Okay.
Yeah. What happens is this. Coming into a Friday in the gold market, when they whacked it today, it's not that the odds go up that they'll go after it tomorrow, but the setup right there for the physical gold, let me just go over the physical gold for a second, the future, would be, we're at 1278. Now, if we could get to 1281 before the close, that would be a different ballgame. Because what would end up happening is that would keep you inside the swing point from the 31st. You know, right now it's positive because we're inside the swing point from the day of strength on the 19th. You know, but and a lot of this, what you're hearing off me right now, it does have to do with coming into a Friday and the gold market. You know, a test tomorrow with lighter volume, and they couldn't croak it, I'd buy it. That's how I'd set that up.
All right.
Okay,
Sounds
man.
Good. Appreciate it. Thank you, Tom.
Have a great one. Have a safe one. What is intriguing, folks, there's no doubt about it, is the XAU and the HUI right now. The XAU and the HUI, they're holding. They haven't broken a swing point. And if you don't break a swing point, folks, okay, that is huge, okay, on the way up or the way down. And in this particular case, you have gold that did get hit. You have the dollar that has gone up. You have bonds that rejected lows. And we'll see how we end up closing out inside the S&P. The aspect of percentage-wise what we have, it's not a big percentage. When you are at highs, however, in the S&P, which we are right now, you know, every point is high. So it's going to be, you know, as we come into this close the next 35 minutes, it's going to be important to see how that shakes out. If we go over to one of the best gold stocks to gauge where can gold go, okay, now this equity has been holding up really well until today. It's Royal Gold. Royal Gold is down on 998,000 shares right now. Now, it is going into 1.1 million, but that's a big number. You know, Royal Gold had held up the last 3 days. Well, someone's pounding it today. Now, it hasn't hit the swing point. The swing point on Royal Gold is 73.55. Right now, it's 75.94. What you'd like to put together, and Rich from Orlando, as you're basically looking at that GLD, what you'd also want to see is this. I'd want to see Royal Gold. The low out there today was 75.28. You'd want to see it reject. Yeah, I'd love to see a test tomorrow of that level. Reject that level. You have that, and then you get a rejection of the GLD simultaneously. Then you get some real action. What happens in the metals market in particular, folks, which I really love about it, is that it's a very small market, number one. So you can line up the physical aspect of it. I line up the dollar. We know the dollar wants to go higher. And then you line up the equities. And what you're looking for is harmony. And we know right now we don't have harmony because we know that the dollar wants higher price. The cool thing is that even with the dollar wanting higher price, the gold equities themselves have not broken a swing. So that's a positive. What is not a positive is they got to, you know, we had an expansion of the physical price of gold. It hasn't broken its day of strength, but that's going to take some work. That's going to take some work, not to break it. That's going to take some work to get into higher price. The way silver is trading, however, is real positive for the aspect of the metals. Why? Because silver is the first one that couldn't hold its day of strength, which was on June 19th. Silver rejected lower price today, had lighter volume, is at 1941, and the number that silver has to get back inside is 1987. And that's really unusual for silver, that you can get gold whacked and silver isn't, because silver is normally much more volatile than gold. And just to give you an idea, silver is down 0.4%, and gold is down 1.2%. So you can see that correlation. It's fairly large correlation. Inside some of the Dow stocks out here, you got Caterpillar up 61, Citigroup is up 137. Let's go over to Citigroup, actually, and see what's going on with Citigroup. So Citigroup, okay, so she has 19 million shares. She's going to the top of the range, and the top of the range on Citigroup is $51. And right now you're at $51.14. We put this back a couple years, and I see. Citigroup was going into a downdraft that had been created out there as she come off the high in January. That high in Citigroup was $55. Came down on 169 million shares, and thus far on the weekly we're doing 54 million. So it's going to need a lot more volume than that in order to basically hold a higher price. BAC, they made that deal. And the way Bank of America is out here right now, up 65 cents, and coming into where the gap down, it had gap down with 334 million shares. The top of that gap is $15.93. Actually, it's $16.23 rather, $16.23. Right now, you're at $16.17. What was intriguing this morning on CNBC, you had the Wells Fargo. If we go over to Wells Fargo for a second, you had the, okay, so that makes sense. You had a guest on that is not right now, but he was the CEO of Wells Fargo. And what they were bringing up, what he was bringing up specifically, they were asking about the fines that were associated with Bank of America, and is this political? And, you know, the fact of the matter is, folks, is that the customers that basically are taken to the cleaners, well, actually, the reality here is that the customers didn't get taken to cleaners because most of the people that had fraudulent loans were fraudulent themselves, okay? And then the bankers were fraudulent because they sold fraudulent loans. So there were a lot of people implicated in it, that's for sure. What that prior CEO of Wells Fargo is bringing up, however, is that this will never stop if, in fact, institutions themselves only get fined and folks don't go to jail. And I absolutely agree with them, there's no doubt. And in my last 30 to 35 years, I've seen this happen 3 times. And guess what? We're in the real estate business. Guess what? This is going to happen again. I remember going into, so check this out. I remember going in, and for the folks up in New England, they'll remember this. There was in fact, this bank was out of New York. It was Dime Savings Bank. And it was a beautiful apartment building in Nashville, New Hampshire. And I had done a lot of business with another bank, with the First National Bank of Boston. And, you know, all these bankers, not that they knew each other, but Dime Savings Bank called me up one day, says, we have this apartment building, and we'd like you to go look at it. And so I went up and looked at it. And the apartment, it was 50 units. And they wanted to get rid of it, and they were just going to give me $1 million. And I said, you're just going to give it to me? And they got me so scared because they were going to give it to me that I didn't buy it. I wish I bought it because it came up a lot more. But what ended up happening, to make a long story short, that was like, what, 15, 20 years ago? And every bank in New England, in New Hampshire went BK because they were doing that to everyone. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now up 70, Nasdaq's up 5, S&Ps are up 6.5. And they're trying to hold these futures, the E-mini futures, folks, of this 1990. It's pretty wild watching this battle shape up, because what has happened to the Dow's give back 20 cents, 20 points rather, and the S&Ps have given back nothing. I suspect, let's go over to the SPY. So I'll show you some intraday. When you're coming into closes like this, the last sell looks to me like they're going to be able to, they're going to try to get it under the 1990. But the bulls and bears are going to be fighting like crazy. I mean like crazy. Why? And it's not the aspect of this. It's really wild how this shakes out, because it's not the aspect of the 1900, meaning an even number, because that is pretty wild in itself. ESU. What the aspect is that this morning, and I can see these guys in the pit right now. ESU. Let me get this up. Current. This morning, on the way up, that is where, basically a lot of people are long. That was the last time that there was any juice in the market, is this 1900. So, of course, what's happening is that they want to hold the 1900 because, most folks that are basically in the pit, whether they're technical or not, they know that level, you break that level, and, you can go to 1985 very quickly. So it's going to be intriguing watching this whole thing shake out. And what I do expect is that as this next 10 minutes, this fight is going to be on 8 minutes in an extraordinary way. Because that's what you have. There's as a man, John Logan would say, that's the DMZ. That's where everything is lined up at this particular point. And coming into a Friday, what ends up happening is the trader knows this. Coming into a Friday, you've had an up week. If you can come into a Friday, basically with an up week, more than likely that price would sustain itself, keep itself. It's not like you're coming into a Wednesday or Thursday. So it's going to be important how we close out here. They're selling something inside the Dow. The Apple, of course, is going to be a big one tomorrow. Apple is going to be a huge one tomorrow at the close. The reason being, I'm sure that there's a lot of folks that are watching that 100.72 number. And right now, Apple is underneath it. Volume-wise, it's going to come in lower, because on a weekly basis, it's 2.3 billion, and right now we've only done 650 million. Okay, so if you, I'm sure many of you listen to our man, Mr. Dave White, and when you pull up at the out of time in the trade charts, the bottom line is that when you're coming into a swing high, and you're coming in with 650 million versus 2.3 billion, okay? And you can't hold price, let me tell you, that is a nice probability set up that thing's going to basically, you can't bust it up. Guess what? You're going to try to bust it down. So there's no need to get over and do anything with Apple just yet with 1 day left. You can wait for that whole baby, for that data to shake out, see if it, in fact, holds price. Because the difference is, of course, if you hold price, it can go higher. If you don't hold price, though, coming into that close tomorrow, that's going to be a decent trade. Well, that would also set up. If you held price, that would set up NDX can go higher. You don't hold price, that sets up NDX wants to go lower. We go over and take a look at the small caps, the Russell 2000, the IWM. We're 115.25 right now. We're doing 29 million shares. She's coming into 50 million. That's on the daily. And what you can do right now, you can start setting up these weeklies to see how you're coming in on the weekly basis. Weeklies is a joke. You're coming into 250 million, and thus far, folks, we've done 111 million. If we take a look at the Qs, we might also do the Qs on the weekly also. The difference is that I'm not sure whether we have a swing point on the Qs. Let's see, on the Qs, oh my God, this is sick. So on the Qs, check this out. This is sick. So the Qs, we've done 98 million, and your swing is 198 million. So you can see that's 50% lighter. On the SPYs, the SPY, we take a look at that, and we... Oh man, this is a trip. The SPY is a real trip. You're dealing with 260 million thus far. Let's say I do another 50, 70 million tomorrow, and you're going into 627 million. So that's about as intense as you can get. Right now, the SPY is at 199.51, and you'd have to pull down also. So that would be at a high, and you wouldn't short it if that's the case. It would have to come down about 50 cents lighter to have a failure on price and a failure on volume. The bonds, they continue to go higher. And if we look across the world, folks, just so you can see, because what is the competition? When you're looking across the world right now on the 10-year, we're still at 2.4 on the 10-year. The France, we can lend them money at 1.3. It's like, really? Germany is No, Germany, man, is 0.9%. That's intense. That's 10 years. 0.9%. Unbelievable. Portugal is 3.2. If we go take a look at a 5-year basis, the United States is paying 1.6. France is paying 0.5%. Germany is paying 0.2%. Wouldn't it be nice to borrow money for 5 years at 0.2%? Man, that's intense. Portugal, 1.7. So see, watch when you look at this. When you look at these rates, if you don't even have to get your head into technicals. Just common sense would be a 5-year note is paying 1.63 in the United States. United Kingdom is paying 1.7. But other than that, and Portugal's paying 1.7. Other than that, just about every country is paying less by a dramatic deal. So you say, okay, do I want to lend my money to France or Germany that are paying tremendously less? And, in fact, not only tremendously less, what is happening is that your euro is going down, your pound is going down. Okay? Forget it. See ya. Don't want to be ya. These bonds are going higher. Yield is going lower. And, of course, what does that mean? That means lower mortgage rates. That means that depending on what rate you're at right now, folks, just give it about another, I'd say give it about another 4 to 6 weeks. And this ABC structure on the bonds should bring that yield down to about 2.2, 2.1. That will bring mortgage rates down in a dramatic sense that if you didn't refinance the last time they were down that low, which was about 1.5 years ago, get out there and do it, because that's going to be cheap money. This is Tom O'Brien. This is TFNN. You stay right there, folks. And don't forget the Tiger Dollar sale. If you haven't taken advantage of it, you can make 40% on your money. It's over this Sunday, so you got a few days to do it. Check it out on the front page of TFNN. If you have subscriptions now or getting them in the future, it's a great way to save 40% or, in fact, make 40% of your money. We're coming right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our cards. This is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Market-wise, let's take a look at it out here. We had the Dow Industrials up 60, NASDAQ up 5.5, S&P's up 6.5, gold contract down to $17 at $1,278 an ounce. Now, what you have with gold is this. They had wide price spread going, price destruction going. Volume didn't go. Bottom line is that you traded against the sign of strength on June 19th, where he did 131,000 contracts. That's going against 222. But you had some juice into it. The real key is going to be tomorrow. Can it hold the 1277? The 1277, folks, is the low of June 19th. That's when we had 225,000 contracts. That's when we went from 1277 to 1322 in 1 day. Bonds. Today, rejected lower price with lighter volume and then went topside. The 10 years at 126. She's on her way to 128. 30-year right now is trading out at a price point of 140.14, up 14 points, ticks rather. Bottom line is that the 30-year absolutely just refuses to go to lower price. Silver market. Now, what you had with silver is this. The last week and a half, silver had traded below its sign of strength on the June 19th. Gold was holding it, as it held it today. The difference in the silver market and the gold market today is that silver rejected lower price. Silver went to 1928. Closed at 1943. That's positive in the concept of where silver wants to go, number one. The XAU, the HUI, both never come back to a swing point. So when I put that together, that's saying to me that the probability that gold wants to go higher is good. That's how that shakes out. It's right at the edge, though. There's no doubt it's at the edge. It's at the edge because of the fact that we're going into a Friday. Going into a Friday that they can smack gold on a Thursday is pretty intense. King dollar. King dollar gave back 25 ticks out here today. Bottom line, King dollar wants higher price. King dollar, 2 days in a row, wide price spread, accelerated volume. Volume out here today as the S&P. So if we take a look at the S&P, the cash S&P, she closed at 1992. That's over the highs. The high that we're talking about is 1991.39. No volume, of course, 562 million. The NASDAQ, the volume was really anemic. And what we're going to see on the weeklies is that the NASDAQ, well, all of them are going to be anemic, but bottom line, NASDAQ held price. After the close out here, you have a lot of numbers coming across. We'll start out with the Gap. That's the clothing store. The Gap closed out here today. There she is. The Gap closed at, oh, hold it. Interesting. GAPT, 5 letters. So that means the Gap has TQ, that the Gap has a few problems. Interesting. No, that's not the Gap. I got the wrong. Okay, here, let's go to Intuit. Intuit out here. Intuit closed at 85.81. That is trading right now at 83.50. Let's see what this says. This is about the only one that's down after the close, I believe. So Intuit software, the estimate for net revenue was $699 million. They came in with $714. They lost 1 penny. GameStop, I think that's GME, is it? So GameStop closed at $40.49. That is trading right now at 40, same price. No, it's not. These are jumping all over the place. This will be interesting to see what happens with GameStop, because what you have with GameStop is that you've been trading at 43.87. The last one just went across lower, but GameStop is going into a vicious downdraft. We take a look at CRM. That's Salesforce, I think. Yeah, so Salesforce closed at $55.71. That is trading at $55.16. And if we look at that, she's been in a consolidation for quite a while. She's still hanging at her highs, though. She's absolutely hanging at her highs. And thanks for one of the Tigresses out there. The Gap, the symbol is GPS. That closed at 43. That is trading at 43.33. So there's no juice there. Let's see what they say by the numbers. The numbers out here go like this with the Gap. Their revenue was $3.98 billion, and that's what they were looking to make, $3.98 billion. Let's go to Danny in Atlanta. Hey, Danny, what's going on?
Hey, I cracked some ribs last week, so I'm a little pain, but I can talk.
That's a beautiful thing, man. Oh, that's pain. That is painful, cracking ribs, man. What happened?
I just slipped in the bathtub.
Oh, oof.
Lucky it didn't land on my head.
No, I'm glad you're all right. If you landed on your head, you might have been better off.
Maybe. Can we look at Royal Gold?
Yeah, you get Royal Gold. Now, this came down $393 with volume today. Now, do you own this? You're looking to buy it? What are we doing?
Looking for where the buy is.
Yeah, be careful with this right now. You know, the Royal Gold was disappointing today in the context that what had happened, folks, Royal Gold is a premier as to where the price of gold is going, the metal price. She came out with some juice today. Now, she didn't break a swing point, but I never like to see volume come out of a stock, period, and we had volume come out of this. So I suspect what you're going to get, you're at 75, 79. This can get into 75, 73.81 in a heartbeat. So I would certainly not bite into it today. You know, I'd let this see what it does tomorrow. If you get into the price point of that 70, if you get into that price point of 73.81, don't touch it, because that means we'll go to 68.
Okay, you got time for another Franco-Nevada?
Yeah, what is that? FR what?
FNV.
FNV?
Yeah, Foxtrot November Victor.
Yeah. Yeah, this is one of the best equities out here, right? So this is Franco-Nevada. This is another royalty stock, folks, okay? Meaning that in this case, they take in $421 million a year, and they have 20 employees. How good is that? Okay, so this got smacked too. Look at that, exact same. That's really weird, man. So whoever the seller was in this, looks like they did it the same way. So at Franco-Nevada, you're at 55.43, and this is the second time this got hit. This is interesting. Okay. So at 55.60, okay, this is pretty cool. This is telling us that this is pretty scary for gold tomorrow morning. That's what's going on here. This is going to be a trip. So we're at 55.43. The high of when this went topside on June 19th was 55.60. The low of that is 52.70. You just let this be. I suspect the way this is trading, it looks like it's going to go down to 52.70. If that's the case, let me see something, though. Hold it. $61. Oh, this is interesting. So watch what the difference here, folks, is that this one has tested its high from 2012. Let me see if it tested, yeah, and oh, this is good. I like this. Okay, hey, Danny, thanks for calling, man. So check this out. Now, this still wants to pull back, okay? But what's happened here is this. So picture this. The last high, September of 2012, it was up at $60 at 7.5 million. Gets to 61 with 5 million, gives it up, comes all the way back. When we went back up there, with 10 million versus 7 million, and then we're going to do another 10 million this month. What that's saying, this is a beautiful thing. What that's saying, folks, is that this is going to end up breaking highs. Real gold will break highs, and that means that we're going higher. Stay right there for a second, Danny, all right?
Okay.
Okay, man. This is Tom O'Brien. This is TFNN. That symbol, folks, is FNV. That's Franco-Nevada. This is going to be really intriguing because now what you've done is this. You pushed into a swing point. You pushed into a high with volume. We'll come right back and explain to you.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Just call, folks. Want to know what's going on in y'all world. We're talking right now with Danny from Atlanta. We're talking about Franco-Nevada. The symbol is FNV. Now, Franco-Nevada is just like Royal Gold. Actually, Royal Gold is like Franco-Nevada because Franco-Nevada has been around for a long time. And what we have here is this, and this is really cool in the aspect of technically how this is set up and where it is saying that the price of gold will go and Franco-Nevada probably as well as Royal Gold. So what we were talking about before the break is this. The high in gold, folks, is 2012, October of 2012. This had an extraordinary run. The equity had gone from $9 up to 90, okay, not to 60. So Royal Gold is making its way up to that high. Hasn't made it yet. But Franco-Nevada made it to that high. That high is $61.60. And it made it this month. It's even better. It made it to $61.47. So it didn't test it yet. But what it's doing is it's pushing into that high with an extraordinary amount of volume. So that is positive in the aspect when you see an equity pushing a swing point with accelerated volume, it wants to break the swing. It's even cooler, actually, that it didn't even test it yet. In this case, it could have because it was so much, the amount of volume is heavily more dramatic. So now where is it going to go from here? Well, it already just went up 100% from the low of gold, which was in June of 2011. So what you have here is that, okay, now where's the buy? And the way this is set up right now, Danny, is that the high of March of this year is $53.39. If you get a rejection of that price with lighter volume, and I'd set this up on the weeklies and the monthlies, that's where the buy would be. It's going to be a tight one, man. The whole thing's going to be a tight one. What's really cool about this, though, is that this is saying that even after this pullback, this thing's going to make a run. And in the aspect of these last 2 months, it's saying Franco-Nevada wants to break that high, man. And you get Franco-Nevada breaking that high, I think this could be an ABC up. Let me just see something. And when I say I think it can, folks, I'm just making sure it didn't do more than a 0.618 retracement. Oh, this is so funny. It did. Okay, so, no, it didn't. It didn't. It didn't do a point more than, so it can be an ABC up, too. So, there's action here, man. And that bodes well for the whole metal market. That's what it comes down to. Thank you, man. Hey, listen, I hope your ribs are feeling better, man.
Hey, thank you, Tom.
Okay, have a great one. Have a safe one. That is a trip, folks, okay? And that's a big heads up inside the gold equity market. There's no two ways about that. Because when you, and I can't say it enough, when you're pushing swings and you're pushing them with volume, it wants to go higher. And in that particular case, that Franco-Nevada, it's pushing it with huge volume, not small volume. And that's basically saying, number one, the supply line is getting eaten beyond belief, but the demand is out there, and is out there in an extraordinary way. And in both cases, you know, just that company only has 20 employees and takes in $425 million. You take a look at Royal Gold. Royal Gold has, oh my God, that's so funny. Oh, hold on, I gotta make sure that, because Royal Gold has 20. Oh my God, this is hilarious. They both have 20 employees. How sick is that? So Franco-Nevada has 20 employees and takes in $420 million a year. Royal Gold has 20 employees and takes in, I think they only take in like 252. Still good numbers, but yeah, 237. 237. Now in 2015, they're looking to take in 361, and Franco-Nevada in 2015 is looking to take in 450. So the bottom line is that both of these equities are a good indicator that the price of gold wants to go higher. The reason being is that their business plan is extraordinary. Their business plan is predicated, folks, on the gross price of gold, not what gold miners make. They act as a bank. What they do specifically is this, is that they actually wait for gold companies to do the work, to know that gold's there, to have all the permitting done. Okay, so they're not taking risk on the permit, and they're not taking, well, you always take the political risk depending what country you're in. But what ends up happening is that when they work like a bank, they finance, and they will give them huge amounts of cash up front, that they get a royalty on the gross sale of gold. And the royalties, the way the royalties are laid out, and this is really cool, the royalties are laid out on a sliding scale. So what ends up happening is that, and they're all different at different mines, but if you want to, look at them, just pull up their prospectus, because it's pretty cool going through them so you can see exactly how this works. Because there's certain break points that, let's say gold right now is at 1278. Well, as you go through them, you're going to see there's certain break points. If gold goes to 13, they get more money. Gold goes to 14, they get more money. If it goes up, well, more percentages. Let's say if they're getting 1.5% at this level, they might get 2.5% later. If it goes up 300 or 400, it bumps up to 5%. It's a big number that the rearing, meaning the leverage that goes along with it when the price of gold goes higher, is dramatic in that context. Let's go over to Home Depot and look at the housing market. Home Depot up 40 cents today, $91.15. This is an equity that broke topside. Looks like a large ABC structure on the way up. You can expect some pullback. If we do get a really sweet pullback, this is something that you want to keep your eye on, because this is a monthly ABC structure on the way up. You know, it was building cause for, let's see, 5, 10, almost 2 years. Took out the B point, took it out with volume, and ABC structures on the way up or the way down, they're straight line moves. You know, we went sideways, drive everyone crazy for a year. Now the first leg up, huge leg up, you already went from 79 to 91 in all 3 or 4 days. You can expect more of that. That's how, what ABC structures do, folks. You know, when you hear folks saying, I can't get in the market because it just keeps going, or I can't get shocked because it just keeps going down. That's the C to D of an ABC structure, whether it's going up or whether it's going down. That's how they like to move. The A to B structure, straight line move. B to C, big consolidation brings you all over the place. C to D, straight line move. The SLV. So let's go over and we take a look at the SLV, which is the iShares Silver Trust. This trades where the price of gold is trading. That also rejected lower price today. We are at 1869. Now, what you want to see, if you're in that silver market, you want to see it get back inside 1936. 1936 was the sign of strength. You want to see it get back inside that. We put this on a weekly basis. Oh, man, it looks nice on a weekly. Man, this looks nice. But you still need the price. We need the price higher. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. The Dow finished up 16. Now it's like a 5.5. S&P's up 6.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 60, NASDAQ up 5.5. You had the S&Ps up 7. And if we go over and we take a look at the DAX in Germany first, DAX in Germany today finished at its highs. This is after getting croaked, so we'll see, coming into this Friday. The DAX right now is at 94.01, and the bottom of ICE, or the beginning of ICE, is 95.27. You know, the DAX had come all the way down from 10,000 to 8,900. So the DAX had come down about 10.5% or 11%, and it came into that swing point. Now, what's so intriguing about the DAX, in correlation to our own NASDAQ, is that the DAX had already taken out the February lows. It took those out in March. Now what you have done is that you've gone into those March lows, 89.13. No, actually 89.13. Yeah, no, you took those out too. So now what you have three. Well, after the high, you only have one lower low right now. But what we do have is that the DAX going all the way back to November of 2013, that's kind of where we are right now. So the DAX, which likes to trade like the NASDAQ, it still looks to me on a counter-trend bounce. The FTSE has done about a 50% retracement of the last move down. The FTSE hasn't been able to get over the consolidation it's been in for almost 8 months. 6,800 is the top of that. 6,894 to be exact. Right now we are at 67.77. You take a look at the correlation, and the way that the FTSE set up is that you're right at ICE right now. So the FTSE tomorrow is going to give you the best indication is that where our markets want to go. You know, actually, I bring this back. Yeah, the FTSE's been in a consolidation longer than that. You talk, well, no, you know, it's amazing. We're at August. You know, it's almost a year. October. October of 2013, that is the exact same place that we're at right at this particular place. We take a look at some of the stocks that continue to try to get to their high. IBM just can't handle it. IBM right now was up $1.13, 2.4 million shares. That 2.4 million is going to 11.25. That's going to be an important one to keep your eye around. United Technologies, that had already broken down. That is climbing back up to ice. Right now we're at 110, and I'd love to see it actually trying to get it to 112.44, because that would be ice. This would be a very large ABC structure on the way down. 3M. 3M came off the highs with volume, making its way back up to the highs. Now, what 3M had to do, if in fact you're going to sell it, is this, and we did it today. What you had yesterday is this. 3M yesterday did 2.2 million. Not that that's a lot of shares for 3M, because it was going into 3.5. But if you're coming into a swing point, when you see an expansion of volume, which 3M did have, because the prior day you did 1.5, so then you did 2.2. You basically back away. You let it do what it wants to do. Well, it did it today. I got over that high of 144.82, closed underneath it, did 1.4 million versus 2.2. What that sets up another run down to 138. You're at 144. And what is sticking out like a sore thumb? And 3M's, the reason you want to keep your eye on 3M is that 3M has been able to hold higher price when we go all the way back to January of this year. January of this year, 3M was 140. We're at 144.40. That's the first part. Second part is that you had volume come off the high. When we made a high at 3M, it made a 146, went down to 143 ASAP, and this is the kicker, you get back inside 140, you're in the lower range, and then what you have sticking out here is 123. The 123, if you look at this chart, you're going to see it's a high volume spike on the way down. It traded down there in volume. It'll come back and test that area. We go over to the oil and gas sector, ExxonMobil. What you're going to see with ExxonMobil is, I suspect tomorrow, it's going to go after this B point. Now, this is where there's a divergence inside the S&P. You know, the largest weighting inside the S&P is actually information technology, which has been strong. Exxon, the energy sector is large, the financials are large. I believe the energy sector is second. And that's why you saw today when, you know, even Dow points, you know, you were up 90 points. We closed up 60, but they were up 90. The S&P still couldn't get over 7 points. One of the main reasons would be that the financials, not the financials, the energy couldn't get any, basically, traction. ExxonMobil is the largest weighting inside the XLE, oil and gas sector, and that is going to go make a run for this B point of an ABC structure on the way down. It had priorly came down hard from 104 to 97, did a little small counter trend bounce, got up to 100, gave up 100 price today, had the lighter volume, and now you're already inside the range to get into lower price. So ExxonMobil is going to be something that you absolutely want to keep your eye on. If we go inside that sector itself, you had Exxon down 42, Schlumberger was down 41, you had Chevron up 44. We go over to Chevron, that's because that's the second weighting inside here, and Chevron is doing the same thing. You know, Chevron held price today, we're up 44 cents versus being down, but there's no juice inside Chevron to get to higher price. The aspect of Apple, of course, is a big one. Walmart. Let's go to Walmart, because Walmart, for a long period of time, has been over the swing point that it took 12 years to get over. That swing point, however, folks, is crucial to keep your eye on. The reason being is that when it did get over the swing point, it didn't have the juice, and we'll see whether it can contain higher price. We're at $75.77 right now. It's $5 lower in order to get to lower price. Because if you got to lower price, what you'd have there, you can't bust it up. You want to bust it down. The aspect of the small caps, bottom line small caps, have dramatically lighter volume on this counter trend bounce. I suspect the small caps once again will lead us lower. Euro. Now the euro, folks, so the dollar breaks topside, euro breaks downtown. What that specifically is going to do is that these European indices, the folks that own them, now watch how this works. So we have plenty of funds, that U.S. funds, that own European stocks, because they own stocks all over the world, right? Now, when you're buying, just as I talked about, if you're buying U.S. bonds or if you're buying stocks in the United States, we have to buy them with U.S. dollars. Well, what happens over in Europe, if you're buying European companies, you have to buy them with euros. When you look at the aspect of where the euro has just gone versus the aspect of where their equity markets have gone, you're losing money because this downdraft inside the euro is dramatic. And I suspect it's going to be a lot more. Right now you have Draghi basically, you know, saying, hey, listen, he hasn't moved yet for even lower rates, but the bottom line is that Europe doesn't have any traction, doesn't look like it's going to get any traction, and what else is happening? You have Putin that is pushing on the Ukraine, which in fact, with a little more push, will push on Europe. We're dealing with August 21st, and what does that mean? Well, after I hear the weather in Boston, it's going to be 45 degrees tonight, or 47 degrees, guess what? In Europe, you're going to be dealing with cold weather. You're going to be dealing with the gas situation. The gas, Putin is going to basically be squeezing the gas situation this winter, and I suspect it's going to start pretty soon. And that, folks, okay, is going to not help the economy. It's not. We'll see whether it actually hurts the economy. But as to helping the economy, there's no way. There's absolutely no way. And, you know, one of our tigers was saying they have plans to invade. I heard that today. The bottom line is that, yeah, my take on Putin, folks, and this whole deal is that, yeah, he's going after it. And he's cute, though. He's a cute killer. And he's a stone-faced killer. There's no doubt about it. And the way that I suspect you know, you go in, you whack him, you pull back. Oh, it's all right, it's all right. Whack him again, it's all right, it's all right. And unfortunately, there's too many. And what this comes down to, though, is politics, and comes down to corporations. Because there's way too many corporations, our corporations, that are doing business in Russia that don't want to give up zero. They want the bread. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Don't forget, the Tiger Dollar sale, folks. You want to make 40% of your money? You can do it by coming over to our website at TFNN. Right in the front page, you're going to see how it works. Dow right now is up 60. NASDAQ up 5.5. S&Ps are up 9. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Right now, Dow closed up 60, NASDAQ up 5.5, S&P's up 6.5. Let's go to Queens, New York. We'll talk with John. Hey, John, what's going on?
Hey, Tom. Thanks for taking the call.
Sure. Thanks for calling. Thanks for holding. Appreciate it.
I heard Andy say he's bullish on gas.
Yes.
And I'd like to get UGAZ, which is a leveraged gas ETF.
Yeah, let's take a look at this. And our man Andy Hecht, folks, is going to be coming up next 5 to 6 o'clock Eastern Standard Time. And don't forget, all the programming at TFNN, folks. We go live from 8 in the morning to 6 at night. You get right on your cell phone, TFNN.mobi. So we take a look at the UGAZ. This is the velocity shares 3 times leverage long position of the natural gas index. The low out here is $11. The high is 42. And this is interesting, man. I know. I can see what you're looking at. So what we have is this. You push today on volume. You're at 1489. And if we put this on a weekly, you know, what you do have is that this is pretty intense, man. This is really intense. So the low of the high is $26.25. The high is 42, and it wants to go there. You know, so when you have a low of a high and a high, and what I'm talking about, folks, if you're driving your car, I have it on a weekly chart. And after you've already gone to a high, because the expansion up, you got to remember something. This is 3 times the gas of gas, and gas loves to basically go topside in a huge way and get crashed in a huge way. So, you know, it's something you trade. The last time that this moved, it went from $11, and 3 months later it was 42. And then 4 months later, it was $11 again, or $13. So let me just I'm going to bring up the actual gas contract, because that's what this is trading off of. So if we bring up the gas contract, what we had is this, and as Andy said when he was giving us the update a little bit earlier, is that the inventories were up, meaning more gas, but yet gas did not get to a lower low. Okay, so, yeah, this is nice. Okay, so what you have is this. Natural gas has just gone from $4.80 in June down to hit a low of $3.72 2 days ago. Now what you've done is that you pushed the $3.95 today with volume. I would say that, yeah, you can bite. You know, I mean, the way this is set up is that natural gas looks like it wants to go run into $4, $4.02 exactly. And if you get, all you need on volume is 117,000 contracts to break that swing point. If you break that swing, you're going to be at 431. And 431, now watch how this lines up, folks, if you're watching Tiger TV. 431, natural gas, which is only 50 cents higher. But you got to remember something. With natural gas, this is what's a mind blow if you trade the futures of natural gas. It's $10,000. It's $10,000 a point, folks, okay? So it's a monster move. But it moves. It moves like that. So if we go back over to UGAZ, you're at 1489, and that correlation, if natural gas just went to that point, would be, yeah, that's a huge move, man. That correlation would be 21 in this, John. That's how that would work out, man. So, you know, the risk versus the reward's not bad. I mean, this is something you know when it's a 3 leverage product. You don't stay in it. If you get the trend going with you, I think the risk versus the reward is pretty good, because you could put your stop under 13.43, so that's $1.50 you're giving it, which is a lot. Okay, it's 11%, but you're going for, oh my God, you're going for 10 points. You know, so. And you know, our man Andy Hecht, he's actually he's right in the den right now, and that's his quote is, "It feels right here for natural gas." And of course, don't forget, you know, Andy's going to be coming up next. So, you know, make sure the money management stays in place, but it looks pretty good right there. Well, in particular, you know what's so really cool? You're in the right place too, because meaning in Queens, in New York, because
it's cool.
Yeah, I mean, I was getting these calls from Boston, you know, and I guess it makes sense. It's August 22nd, but it doesn't make sense that it gets like under 60 degrees in the summer. And I guess in Boston, it's going to be 47 tonight. That's a problem. That means, folks, there's a lot of natural gas. Well, I had natural gas when I was up in Boston. A lot of people do. They're going to put the gas on. They're like, who ever heard of putting gas on in August? That's pretty insane, man. Cooking, brother.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. And what is really cool, folks, I'm telling you, come on down to Florida. Because what happened last year here is that, you know, because it was so cold across the country, it always does affect, you know, the whole country. And in Florida, what ended up happening is that, you know, you get colder by 3 or 4 degrees, but 3 or 4 degrees is like just perfect. And I'll let you know in the next few days, because if it's going to be that cold in the Northeast, most times what ends up happening, it cools things off a little in Florida. And in Florida at this time of the year, our hottest time of the year is definitely from here to about the 3rd week of September. You know, that's when it's, and if we can be 5 degrees cooler, then, oh my God, it's like heaven. It is absolutely like heaven. So we'll see where that whole thing shakes out. But inside that commodity complex, you know, another thing that is really interesting, you know, Andy was bringing up the fact that the build was larger, and in fact, what you still had is that gas held the low. And in that context, we know that the dollar index is going higher. So the dollar is going higher, and with that commodity also holding, that's a huge plus. You know, because the fact of the matter is that you have commodities that are priced in U.S. dollars. As the dollar goes higher, that basically makes the commodities themselves most of the time go lower. That's how that whole baby shakes out. You know, it smooths itself out, but the reality is that's how it goes. This fight between gold, silver, and the dollar is going to be incredible watching. You know, at this point today, I like what happened in the silver market. I don't particularly like what happened in the gold market, because we had an expansion of volume. It held the June 19th day of strength, but of course we're coming into a Friday. And of course, don't forget, tomorrow morning, folks, you know, John Logan starts off at 8 o'clock. I have another show with Daryl Martin in the morning, 10 to 11. And of course, then we'll be back with you from 3 to 5 Eastern Standard Time. You stay right there. We got our man, Mr. Andy Heck, coming up, folks. He's going to be growling and prowling with you. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Thanks for being here, folks. You stay right here. Our man, Mr. Andy Heck, is going to be growling and prowling with you in a few minutes. Go get him, folks.